Today we will discuss accounting equations. Accounting equations signifies that the assets of a business are always equal to the total of its liabilities and capitals. That means the capitals honors equity. Asset is equal to liability plus capitals. Here assets is a resources and liability plus capitals is a claims on resources. Capital also called the owner's capitals or owner's equity. These equations can also be presented in the following forms as its derivatives to enable the determination of missing figure of capital and liability. So here is this formula: assets minus liability is equal to capital. You can find the capitals. Here assets minus capital is equal to liability, so you can find the liability. Since the accounting equations depict the fundamental relationship among the component of the balance sheet, it is also called the balance sheet equations. The balance sheet is a statement of assets, liability and equity. That means the owner's equity. At any point of time, resources of business entity must be equal to the claims of those who have financed these resources. The proprietor and outsiders provide the resources of business. The claim of the proprietor is called capitals and that of the outsider is known as liability. Each element of the equations is a part of balance sheet, which states the financial positions of the business on a particular date. Asset side of the balance sheet is the list of assets which business entity owns, and the liability side of the balance sheet is the list of owners' claims and outsiders' claims. That means what the business entity owns. Initially, owner's equity is affected by the capital contribution, such as the issuance of a stock. Once business operations commence, there will be income. That means the revenues minus expenses, and it can be the gain minus losses, and perhaps the additional capitals and withdrawals which generate such as dividends. At the end of the reporting period, these items will impact on owner's equity. These additional items under owner's equity are tracked in temporary account until the end of the accounting period, at which time they are close to owner's equity. The accounting equations hold at all times over the lifetime of the business. When a transaction occurs and total assets of business may change, but the equations will remain in balance. The accounting equations serve as the basis for the business balance sheet. To better understand the accounting equations, consider the following examples. Let's take one practical examples. It will show how to prepare the balance sheet based on accounting equations. Before that, we will discuss the format to prepare the accounting balance sheet based on accounting equations. Here is the accounting equation: asset is equal to liability plus capitals. So under the account assets, here is a cash plus bike parts. I take the bike parts especially for this example, plus account receivables is equal to accounts payables plus capitals plus revenues minus expenses. And here I take for especially for this examples the March 1st and whatever the date is here. So one by one we will discuss the transactions and analyze the transactions, then put the same value according to the accounting equations. So here on March 1st, Mr. Peter contribute rupees 75,000 in cash to capitalize the business. So he started business with cash rupees 75,000. So it So it will be the 75,000 as a capitals. So we have to put the asset side the 75,000 as a cash, and simultaneously it will be in the capital column both 75,000. So here we can put here 75,000 increased cash dash 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 is equal to dash, plus here is also 75,000. Okay, next transaction is purchased rupees 25,000 in bike parts on accounts payable in 30 days. That means the inventory parts, then the bike parts will be increased by 25,000 and accounts payables also be increased for the same. So you will put the account bike parts columns for 25,000 here. But on that day 8 March 25,000 will be increased, dash is equal to accounts payable also increased by 25,000 dash. So we'll take another examples. So transactions on 15th March paid first month shop rent of rupees 10,000. So when we pay any shop rent, that will be the expenses. So cash will be decreased by 10,000, and on the liability side, so we will show the 10,000 rent under the expenses. So first we will decrease the 10,000 under the heading on 15th. 10,000 will be decreased cash, and it will be show here 10,000. So here 10,000 here decrease, that is expenses. Then another examples on 17th March repairs bikes for rupees 11,000. So that 11,000 will be the revenues for the paiders because it repairs the bikes, and collected only 4,000 rupees here, 4,000 cash, and billed customers for rupees 7,400. So under the heading of the revenues we will put 11,000 on the liability sides, then under the heading of cash 4,000 on asset sides, and this is a account receivables we will get letters from the customers. So put all the value here. First under the revenue on that day we will put here 11,000. Then here under the cash items 4,000 cash comes in business collected, and dash this 7,000 will collect later, so under the account receivables. So okay, next items. On 18th March 2,750 in bike parts were used. That analysis of the transaction is that the 2,750 bike parts will be decreased, and that is the expenses. So we will show the same amounts under the expenses of the liability side. So we will put here on 18 2,000, how much? 2,750 is decreased is equal to, I will show that the expenses 2,750 here. So next items, on 25th March collected 4,250 from customers accounts. The analysis of these transactions, we can see the collected 4,250, that means the cash will be increased, and it's collected from the customer, so accounts receivable will be decreased. So we can put here on 25th, cash will be increased by 4,250, and here 4,250 will be decreased. So last transaction is paid rupees 5,000 to suppliers for parts purchased earlier in the month. So cash will be decreased by 5,000 and accounts payable will be also decreased by 5,000. So here on 28 March 5,000 cash will be decreased, equal to here 5,000 also decreased. Now we total all the items here, so that will be 68,250 and plus that will be 22,250 and that will be 2,750 is equal to, this will be 20,000 plus this will be 75,000 and this will be minus 1,750. So now I total these three items, that will be the 93,250 and that amount is a minus, so it will be deducted from the capitals because of the loss. So here will be 93,250. So we can see both side is equal, so balance sheet is matched. Here I format the balance sheet items were horizontals. So for the convenience we just put here the balance sheet format verticals. Same item, same amount is here. For your convenience we can see both the balance sheet is equals. So this is a very common and you can understand, you just see the logic how the balance sheet is based on accounting equations. For more video please subscribe my channels MS Khan.